Hello students and welcome to this question. It's called 11.2 Modcon. It's quite a good question. I like it a lot because it concerns itself with termination benefits. So I find this quite interesting. I want us to read together. And termination benefits is basically when an offer is made to employees where the company wants employees to discontinue their services, and it's very similar to being redundant, right? So it's normally in circumstances of retrenchment where they are trying to reduce their employee scale. So here they say that Modcon made an offer of voluntary termination to employees, and according to the offer, employees could elect to be retrenched at any of the ensuing 4 years. The offer was made to the affected employees on 30 November 2005. Then they say the discount rate, an appropriate discount rate is 7.2% per annum after tax. The corporate tax rate is 28%. So this is important because we are working within the future, right? So they talk about December 2005 to December 2008. Those are the 4 years that you can opt to be voluntarily retrenched so that they can pay out a package to you, and you will be obligated then, if you're the employee, to leave the business. What is important is Section 11J states that when we work with future values, those values are not discounted by the after-tax rate, but rather by the before-tax rate. So we need to go and rework the 7.2% so that it's a rate before tax, because that's what the Tax Act requires of us to do. Then termination benefits are payable early in January of the year after accepting the voluntary termination. Then they said for the termination, the employment package is 3 times the annual gross salary of the employee. And then they've given you for the current year, they say annual gross salary for the current year ended December 2005. And then they give you the number of employees who will probably accept it in 2005, who will accept the packages in 2006, 7, and 8. Another catch in this termination question is the fact that the salaries escalate every year. So here I think it's quite interesting, quite a bit of calculations to do. And then they say SARS will allow deductions in terms of employees who have accepted termination benefits. So this basically means that if you pay the termination benefit from the company's perspective, it will be considered 11A. So they will deduct it as they would have deducted it in their gross income calculation by deducting normal expenses in the normal that is incurred in the normal trade. Then for they ask you to calculate a provision for termination benefits between December 2005 to December 2008. So we need to estimate a provision of how much the present value is. So if I talk about the present value, they've said here the current year ended 31st December. So because we're setting up financial statements, our present value will then be 31st December 2005. That would be our present day from a calculation viewpoint, because that's the financial year that we are currently calculating. 2006, 7, and 8 is obviously estimations that they have made, but that's what accounting is, the best estimate, right? And then we call it a provision. I want us to start by looking at how we're going to approach this question. So I've already highlighted a few problems. So I think the main problems in the question is firstly that there's a problem with the discount rate, and that the discount rate needs to be the before tax rate. And then the salary escalations are also something that need to be taken into account. So when I approach this question, I will first attempt to solve these two main problems, because if I'm unable to solve them, then I will not be able to get to my final answer. Because with the final answer, one can do a lot of your calculations on the financial calculator, but we have to have the right figures to punch into the calculator. It can only process what we tell it to process. So the first thing that I would fix in this question, and this will now all be required A, is I will say that we have a before tax rate of 7.2%. So here we want to then indicate that the tax rate is 28%. So this represents 72%. Because after tax, sorry, this should read after tax rate. We're trying to calculate the before tax rate. The after tax rate is 7.2%. So the before tax rate would have been at 100%, right? And then we would have deducted 28%, and then the after tax rate, what remains is 72%. So 7.2% is 72%. So if I divide the 7.2, so my calculation is going to be 7.2% divided by what it represents, 72, times by what we want to calculate, 100. So that should give you 10%, if I am not mistaken. So the before tax rate would be 10%. So we are applying the principle of dividing by what we have times by what we want. And then just look at when I do the calculations, I don't divide by 72%. I just divide by 72. And I times by 100. I don't times by 100%. That is an important calculatory math just to pay attention to. So the before tax rate would be 10% because 7.2% was after tax. So before tax, this is the rate that section 11J says we need to use. Right. Then moving along, we need to go and calculate the escalations for every year. So I believe we are starting with 2005, which is our current year. Then we have 2006, 2007, 2008, 2000. Oh, it only goes up to 2008. All right. So here I'm just going to say we need to go and calculate our escalation. So for the first interval, we have 60,000 Rand salaries per annum. Then for the second one, 150,000. Then for the third, 350,000. And then 850,000. Right, so these are all my groups given, basically salary intervals or amounts given. And I'm literally just reading it from the question. So now I have to go and escalate each of these by this percentage that states, 15%, 12%, 10%. So for 2006, I'm going to say it's 60,000 times 1.15. 1.5. Then for 2007, I'm going to say it's increasing 15% from 2006. So please remember that for increases, it's an increase on an increase. And then in 2008, it's increasing again by 15%, but from 2007's amount, we add 15%. And I'm just going to apply then this by the percentage stated for each little gross salary interval. So I'm going to take 150,000 and this escalates by 12% every year. And I'm just going to apply the same principle, 12%. I calculate an increase of 12% on last year's amount. Then for the 350,000, there is a 10% increase every year. So that's 1.1. Again, I used 2006 to calculate 2007. Then for the 850, it's a 13% increase every year. If I can just figure out Excel. So I'm literally just increasing it by the percentage stated. Alright, so now we have all the increased gross salaries and we've calculated our escalations. So now we can do our calculations as a whole, right? So I'm going to start off and I'm going to do the calculations per year. For 2005, we are looking at the number of people who are going to accept the termination packages, which is then numbers that I'm reading from here. 2006, that's the number of employees. 2007, 2008. So for 2005, we're going to have 200 people accepting 60,000 Rand packages. But please remember that the packages promised 3 times the employee's salary. That's quite important information as well. So 200 people earning 60,000 Rand in 2005 will get 3 times their salary. Then for the next interval, 150,000 Rand, and there 50 people will get 3 times their salary. For the next interval, we're going to say it's 350,000 and there will be 10 individuals getting 3 times that salary. Right, so now we can get to a total for 2005. So let me just do this and merge it in the middle. So this answer is 200 times that times 3. 150,000 times 3 times 50. And for the last interval as well, so we can get to a total. Right, then we can do calculations for 2006. So I'm just going to maybe put them separate so that you can interpret this memo. So we're in 2006 and there we will see an escalation. So we're going to have, again, I will just type out the calculation. So for 2006, we are now going to have 150 people. And now the annual salary is going to be 69,000 and people are going to get 3 times that amount. Then there will be 10 people who get 3 times the 168 in 2006. And there will be 5 people who get 3 times in 2006, 385,000. And I'm reading the figures from there, 150, 50, 10 and 5. So that's where I got the 150, 10 and 5 from. If we do that calculation, I'm just using Excel to bring me to the right answers. 10 times 3 times 5 times 3 times that amount. And we can get to a total for 2006. Right, we are on 2007. By now you should get the hang of it. And of course then we still have to do 2008 as well. So typing the calculations for 2007, if I look at the figures, there will be 100 people getting 3 times their salary, and now it's going to be this amount, 79,350. Then there will be 3 people getting 3 times the salary, which is now the second interval's value, and by now it has escalated to 188,160. Then by 2007, there will be nobody in the category of receiving the interval, which was originally 350,000. So there's 0 people there, but 1 with the original 850,000 interval. So it's 1 times 3 times, and that interval in 2007 is now 1085365. Right, so it's 100 times 3 times 79,350. 3 times 3, so much fun. And then 1 times 3 is 3 times that annual amount. And I just need to get to the sum of everything. And then lastly, 2008. By now, you're kind of bored. You're getting it. But let's do it anyway, just in case. Just don't fall asleep. Because it's a pattern. You have to do the same thing over and over again. So in 2008, I see if I look at the figures, there's only one interval, and that there's 50 people will get 3 times their salary. And it was originally the 60,000 interval, but it's now 91252.50. If I do that calculation, it just times it by the right one. It should be F. What? F8. There we go. Excel is not being my friend. And then obviously the total will be the same there. All right, now we have only won half the battle, right? Because now we have not yet discounted the amounts. So 2005 will be considered, if we do our discounting, it will be considered year 0, because in discounting, 0 is the present time, and we are in the current financial year 2005. So 2006 will be 1 year from now, 2007 2 years from now, 2008 3 years from now. If we look at our amount for 2005, it will remain as is, because for the present value, we're trying to calculate the present value. And if we are in 2005 and it's worth this, it looks like 69 million. It is the present value because we are in the present, because 2005 is the current financial year. However, in year 2006, it's 1 year from the present time. So now we will have to type into our calculators, and I'm just looking to find mine. What did I do? So I'm using my financial calculator. I think by now you have kind of figured out yours as well. Thank goodness. So yeah, we need to go and type it into our financial calculators and see what we can get. So now, 1 year from now is 2006. So the future value will be in 2006, and that is the amount that we've calculated, the total 418,650,000. Then N, the timing, it is 1 year from the present. The percentage should be the before, the I, it should be the before tax rate, which was 10%, and then we can calculate our present value. So what is the present value for 2006? Let me type that into my calculator. 418,650,000 will be the future value at 10% in 1 year's time. Compute the present value. I get a present value of 38059090. Trying to type in the commas correctly. So I have 38 should be 13, slip of the finger. 38059090,91. That is my present value. Then for the year 2, which is then 2007, 2 years from the present time, we have a future value as well, and that future value we have calculated to be 287,54535. These figures can be tricky if you don't type carefully. Then N, it is 2 years from the current time. The rate is 10%. And what is our present value there? 287,54535 is the future value. At 10% in 2 years' time, get to the present value. I get 23. I have to type carefully again. 76,40,78.51. 2008, we also have a future value that we've calculated. Again, typing carefully. 1,3,6,87,875. The N is 3 years from now. The I is 10%. And let's see. For the present value, what is your answer for the present value? Let's see if I give you 2 seconds. Are you able to work your calculator quickly and accurately? If I type it into my calculator, I just clear my memory. 136,87875 future value at 10%. In 3 years, compute the present value. I get 102,839,03,8 cents. Right, so what would be the total for my provision? This provision for the termination. It will be the sum of all the present values. Right, so I now again need to type very carefully. So it's going to be this amount plus 380,590,90,91 plus 237,640,78,51 plus 102,83903,08. So that is going to be the total of the amount or the present value of the total of the provision that needs to be created if we want to make sure that we have enough money in place, if we want to make sure that we can, I want to say, securely allow our employees to be terminated or retrenched voluntarily. So this is quite an interesting question because it has several calculations that can go totally wrong. Students forget about the after-tax rate, that it should always be the pre-tax rate or the before-tax rate for discounting. They do not get the escalations correct, or they don't calculate them. They don't mind the 3 times the normal salary. Some students ignore the 3 and then they just do the calculations and they discount everything correctly, but the answers are incorrect because they forgot about the 3. And then, of course, students ignore the fact that if we are in 2005, the amount that we've calculated for 2005 is already the present value. So it's only 1 year from now, 2 years, 3 years from now that the discounting will be done because the current year ended 31st December 2005. So this was quite an interesting question. You had to know how to type correctly. Let me just recheck that I have 102,83903,08 that I have typed correctly, 237,640,78 and 38059,090,91. So yeah, I hope that you've enjoyed this termination calculation. I thought it was very interesting and rather quite challenging. And then I will see you in our next video concerning employee benefits.